The year 2025 hasn't been kind to PiCoin. The cryptocurrency market has seen its fair share of ups and downs, but PiCoin's recent performance has been particularly concerning for investors and enthusiasts alike. After hitting an all-time high of $2.98 on February 26, the cryptocurrency has been on a downward spiral. This peak was a moment of triumph for many who had invested early, but the subsequent decline has been steep and relentless. As of April 2, 2025, PiCoin trades around 82.54 cents. This dramatic drop has left many questioning the stability and future of the coin. That's a drop of 4.66% in just 24 hours. Such volatility is not uncommon in the cryptocurrency world, but it still raises alarms among traders and investors. Looking at the bigger picture, the coin has plummeted nearly 17% in the past week, and a staggering 47% over the last 2 weeks. These numbers paint a grim picture for the short-term prospects of PiCoin. This decline represents a significant fall from grace for a coin that once held the 11th spot on CoinMarketCap. The drop in ranking is a clear indicator of the challenges PiCoin is currently facing in the competitive cryptocurrency market. Now, it sits at 24th with a market cap of $5.59 billion, down 5% from the previous day. The shrinking market cap reflects the waning confidence among investors. Trading volume has also taken a hit, dropping 51% to $189.04 million. Lower trading volumes often signal reduced interest and activity in the market. This downturn has left many investors and enthusiasts wondering about the future of PiCoin. The community is abuzz with speculation and concern, as everyone tries to make sense of the rapid decline. What factors are contributing to this decline? Is it market manipulation, broader economic trends, or something inherent to PiCoin itself? Is there hope for a rebound? Some analysts believe that the coin could recover if certain conditions are met, while others are more skeptical. Let's delve into the reasons behind Pi's recent struggles and explore the potential for recovery. Understanding the underlying issues can help investors make more informed decisions moving forward. One of the most significant blows to PiCoin's recent performance is the reported rejection by Binance, the world's largest cryptocurrency exchange, to list the coin. This decision has sent ripples through the cryptocurrency community, causing many to question the future prospects of PiCoin. This decision came as a surprise to many, especially considering a Binance Square poll, where 86% of 295,000 participants voted in favor of listing Pi. The overwhelming support in the poll had created a sense of optimism among PiCoin enthusiasts, who believed that a Binance listing was imminent. Binance has yet to release an official statement confirming or denying this rejection, adding to the uncertainty surrounding PiCoin. The lack of transparency from Binance has only fueled speculation and concern among investors and traders. The lack of a Binance listing has several immediate consequences for Pi. Without the backing of such a major exchange, PiCoin faces significant hurdles in gaining widespread acceptance and trust within the cryptocurrency market. First, it limits the coin's accessibility to a broader audience. Many potential investors rely on major exchanges like Binance to discover and trade new cryptocurrencies. Binance boasts a massive user base, and a listing would have exposed Pi to millions of potential investors. Second, it hampers liquidity. Liquidity is crucial for any cryptocurrency, as it determines how easily the coin can be bought or sold without affecting its price. Binance provides a platform for high-volume trading, and its absence restricts the ease with which Pi can be bought and sold. This lack of liquidity can lead to higher volatility and less stable prices for PiCoin. Finally, the rejection casts a shadow of doubt over Pi's credibility. For many investors, a listing on Binance is seen as a stamp of approval, a sign that the coin has met certain standards of legitimacy and security. Binance is known for its rigorous listing criteria, and this decision raises questions about Pi's legitimacy in the eyes of some investors. The road ahead for PiCoin is now more uncertain than ever, and only time will tell how it will navigate these challenges. To understand the weight of Binance's decision, it's crucial to grasp the exchange's influence in the cryptocurrency world. Binance is one of the largest and most well-known cryptocurrency exchanges globally, often setting trends and standards within the industry. Its decisions can significantly impact the market, influencing investor behavior and the success of various cryptocurrencies. Binance is not just an exchange, it's a gateway for many investors entering the crypto market. It serves as a bridge between traditional finance and the burgeoning world of digital assets, making it easier for new investors to get involved. The platform's user-friendly interface and extensive educational resources help demystify the complexities of cryptocurrency trading. Its vast user base, coupled with its reputation for security and reliability, makes it a coveted platform for any cryptocurrency project. Binance's advanced security measures, including two-factor authentication and cold storage, provide peace of mind for investors, ensuring their assets are well protected. A listing on Binance often translates to increased visibility, trading volume, and ultimately, price appreciation. The exchange's high liquidity means that listed coins can be traded quickly and efficiently, attracting more traders and investors. For a relatively new cryptocurrency like Pi, still finding its footing in a competitive market, a Binance listing could have been a game changer. It would have opened doors to a broader audience, providing the exposure needed to gain traction and build a solid community of supporters. It would have provided the legitimacy and exposure needed to attract more investors, boosting its market capitalization and overall adoption. The increased trading volume and visibility could have led to strategic partnerships and further development of the Pi ecosystem. The absence of this crucial stepping stone leaves PiCoin grappling for stability and recognition in a crowded market. Without the backing of a major exchange like Binance, Pi faces an uphill battle to establish itself and gain the trust of potential investors. While the Binance rejection has undoubtedly impacted PiCoin's price, it's not the only factor at play. PiNetwork is currently undergoing a significant transition, migrating from a testnet to a fully operational mainnet. This migration process involves transferring user data, verifying accounts, and enhancing the network's security. However, this transition hasn't been without its hiccups. Initially, PiNetwork relied on phone numbers for user verification. However, this method proved susceptible to security vulnerabilities. To address this, the network is shifting to email-based two-factor authentication, requiring users to link their PI accounts to verified email addresses. This transition, while aimed at strengthening security, has presented challenges for some users. Many have encountered difficulties due to missing or incorrect email information associated with their accounts, leading to delays and frustrations. The move to email-based two-factor authentication signifies PiNetwork's commitment to enhancing security and preparing for mainstream adoption. However, it also highlights the growing pains associated with a project of this scale. The transition has exposed weaknesses in the initial account verification process and the challenges of managing a vast and rapidly growing user base. Despite the initial hurdles, the shift to email-based two-factor authentication is a step in the right direction. It paves the way for implementing more robust security measures, such as passkeys and biometrics, in the future. This transition, while turbulent in the short term, is essential for building a secure and sustainable ecosystem for PiCoin in the long run. Looking ahead to April, the outlook for PiCoin remains uncertain. The recent price decline, coupled with the ongoing mainnet migration challenges, has created a cloud of doubt around the project. However, several potential catalysts could positively impact Pi's price in April. One such catalyst is the possibility of PiCoin getting listed on other major exchanges. While Binance's rejection was a setback, other reputable exchanges like Upbit, Bithumb, Coinbase, Kraken, and Gemini could provide Pi with the much-needed platform for increased trading activity and exposure. Another factor that could contribute to a price surge is a broader recovery in the cryptocurrency market. The entire crypto market has experienced a downturn in recent months, and a positive shift in sentiment could benefit PiCoin. If Bitcoin, the leading cryptocurrency, starts an upward trend, altcoins like Pi often follow suit. Furthermore, April sees a relatively low volume of PiCoin unlocks compared to the following months. Token unlocks, where previously restricted tokens become available for trading, can sometimes negatively impact the price due to increased selling pressure. The lower unlock volume in April could provide some price stability and potentially attract more investors looking for a less volatile entry point. However, it's crucial to acknowledge the bearish sentiment surrounding PiCoin. The recent price decline and Binance's rejection have raised concerns about the project's legitimacy and future prospects. Some critics argue that PiNetwork lacks transparency and question the coin's real-world utility. Adding to the uncertainty are the technical challenges associated with the Mainnet migration. The shift to email-based two-factor authentication, while necessary, has created temporary disruptions for some users. The success of the migration process and the network's ability to address these challenges will play a crucial role in shaping market sentiment in the coming months. In conclusion, the future of PiCoin remains uncertain. The recent price decline, Binance's rejection, and the ongoing Mainnet migration challenges have created both opportunities and risks. While potential catalysts like listings on other exchanges and a broader crypto market recovery could boost Pi's price, concerns about transparency, technical challenges, and negative market sentiment remain. Investors and enthusiasts should approach PiCoin with cautious optimism. The project has potential, but it's crucial to acknowledge the risks involved. Thorough research, careful consideration of market trends, and realistic expectations are essential for navigating the volatile world of cryptocurrency. Only time will tell if PiCoin can overcome its current challenges and fulfill its promise of becoming a widely adopted and valuable digital currency.